What is going on, traders? Welcome back to the Traveling Trader. In this video, we will be talking about a topic that I get tons of questions on. What the heck is a stop limit and how do I use it? And even if you know what a stop limit is, you might be confused as to how to set one or at what price should you set it. I get this question all the time in our Discord community. What should my stop limit be on a given stock? So I will give you some easy guidelines to follow so that going forward, you never leave a trade unprotected. I will also be showing you exact examples in Robinhood and on Thinkorswim on how to set stop limits on those platforms. So let's get right into it. I'll leave the timestamps and chapters below. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know if this helped you, and let's get right into it. All right, so first let's get into what exactly is a stop limit order. A stop limit order is just a limit order that has a trigger. Now, what is a limit order? Well, let's say if you're selling a stock and you set a limit order, that tells the exchange sell it at this price or better, meaning higher if you're looking to sell something for more money. So let's go into our portfolio, for example, and we'll look at a stock that's currently slightly down. We'll look at Palantir. And this is our 10K challenge portfolio, by the way. If you want to follow along with the challenge, sign up to our private trading group. Link is in the description. Okay, so let's just say that Palantir right now is slightly down. We're slightly up on it since we bought in, but on the day it's slightly down, and we want to set a stop limit in order to protect against further downside. And let's say that our maximum threshold, meaning the most that we're willing to lose on Palantir, is if it drops to $20. Anything below $20 we want to sell. Well, if you set up just a regular limit order here, the problem is that your order will likely execute immediately. Because remember, a limit order tells the exchange sell for this price or better, meaning in this case, or higher. So if you just set a $20 limit order on Palantir, it's going to sell for $20 or higher. And since Palantir is already above $20 at the time of this recording, that order will execute immediately. And even worse, it might execute for lower than $22.45 because there might be some orders on the books already for buyers who are willing to buy Palantir for, let's say, $21. So we definitely don't want to do that. This is where the stop comes in, and why in the stop limit hierarchy, the stop price is always higher than the limit price when you are selling your position. The stop price acts as the trigger, and the limit price is exactly what I just told you. It's just a regular limit order. So your limit price would be $20, as we discussed, because that is the maximum that you're willing to lose on Palantir, is if it falls below 20. And your stop price would be slightly above your limit price. So in this case, we could say that your stop price would be $20.05. And with highly traded stocks that have a lot of volume and a lot of liquidity, the difference between your stop price and your limit price can actually be a few cents in this regard. You could set it to 5 cents or 10 cents if you wanted to be a little more careful. On stocks that have a wide bid-ask spread, usually stocks that aren't that liquid, you might have to set the difference between your stop price and your limit price a lot wider. But in this case, we could set it within 5 or 10 cents. So this is telling the exchange when Palantir hits $20.05, please sell Palantir, put in a limit order for Palantir at $20. And remember, again, a limit order is telling the exchange sell it for $20 or above. So once the stop price hits $20.05, it will automatically put in that limit order and execute your position. And there you go. You accepted the max loss that you're willing to accept for this stock. Now, later in the video, I'll step through Robinhood and I'll step through Thinkorswim, and I'll show you how to do this on both platforms in detail. Now, you don't always have to do this for a loss, meaning you don't always have to set a stop limit when you're trying to protect a loss. If you are up significantly on a position and you're trying to protect profits, you can do that as well. So let's just say on Tesla here, we are currently up 15% on our Tesla position. And let's just say that we want to protect these profits. We bought in Tesla at $639. It's currently $739 at the time of this recording. So $100 more than we bought in. Let's say that the max we're willing to lose here is if Tesla drops below $725. So you could set your limit price at $725, and you could set your stop price at, again, Tesla is a highly liquid stock, so you could actually have the difference between your stop price and your limit price be pretty narrow in this regard. So let's just say your stop price can be 72.05, or to be just a little more safe because Tesla is high priced, let's just say 725.10. So this is telling the exchange when Tesla hits 725.10, put in a limit order to sell my position for 725. And remember, we bought Tesla in this case for 639, so we're still exiting our position for profit. Now, I will talk about something a little more sophisticated called a trailing stop in a different video, but for this video, we're just going to be talking about stop limits and stop losses. Speaking of stop losses, what is the difference between a stop limit and a stop loss? Well, it's a very subtle difference. A stop limit, just like the name suggests, is a limit order. So once the stop price is hit, once the trigger price is hit, it initiates a limit order. A stop loss is a market order. So in this case, you can actually do a stop loss. And if Tesla hits that price of 725, then it just initiates a market order. Now, why would you not want to do this? And why do I prefer using stop limits? Well, because if something is free falling, then a stop loss, which initiates a market order, means that once Tesla hits 725, if it is free falling, it can actually fill at any price. You're not telling the market, this is my limit, sell it at 725 or higher. If Tesla is just tanking and it is free falling, and once it hits 725, it initiates a market order, then it can actually fill at any order below 725. Now, it is highly unlikely, especially with a liquid stock like Tesla, for that to happen. So you could get away with setting stop losses as market orders, but on something that isn't that liquid, that has a wild swing within a short time period, it could get more and more dangerous, and you are much better served setting stop limits than stop losses. But that is the main difference between a stop limit and a stop loss. Is a stop limit initiates a limit order when the stop price or the trigger is hit, and a stop loss initiates a market order when the stop price or trigger is hit. Okay, in this section, I'll go through in detail on Robinhood how to set a stop limit order and a stop loss order, and we'll do one on Thinkorswim for good measure. And then I will tell you what guidelines to follow and how to set stop limits for your positions, what prices you should set stop limits for on your positions. Okay, we're here back on Robinhood. Let's pick our NIO position, for instance, that we're currently down on. And let's say that $35 is the maximum that we're willing to accept in terms of a loss or a price for NIO. So in Robinhood, you come up here, sell NIO, obviously, because we're going to be liquidating our position if NIO does fall past our threshold. You click this little arrow here and you go to stop limit order. Now, in this case, like I said, let's just say that our max threshold is $35. So you could set your stop price slightly higher than that. $35.05 will do for a very liquid stock like NIO. And our limit price would be 35. We could see here that we have 10 shares available. And if you wanted to liquidate your entire position, you would put 10 shares. Good for day means that the order will remain open for that entire trading day. That's another thing, is that stop limits and stop losses don't execute after hours. So it will only be good for the day. Now, if you did good till canceled, that means that Robinhood will keep this order open the next day if it doesn't get fulfilled that day. And it does so for 90 days. So if you want this to be open in perpetuity, or at least for the next 90 days, then you would click good till canceled. Otherwise, keep it open for good for day, and you would hit review order. And again, this would be telling Robinhood if $35.05 is hit, enter a limit price for $35, i.e. sell NIO for $35 or better. You would hit continue and then actually execute it. Now, if you wanted to do a stop loss, it's very similar. You just click the little arrow and go to stop loss as opposed to stop limit. And remember, in a stop loss, you're only going to be entering one price because it is a market order. So you would just put $35, the number of shares that you want to sell, hit review order. Remember, if you continue, you're going to have to pick whether you want it good for day or good until canceled. Let's just say that it's good for the day and hit sell and you are done. All right, now let's talk about how to do this on Thinkorswim, which is not as clean of an interface as Robinhood. It is a little more complicated, but the principles are still the same. So I have a small position on Fubo TV here. I have 100 shares of Fubo, and assume that I don't want to hold Fubo below $18. I don't want to bag hold this. So in Thinkorswim, you can right click on the position itself, create closing order. Let's sell 100 shares of Fubo here. And down here in the order dialog box, instead of limit, you can set stop limit. And remember, if we just set a limit order at 18, it would likely fill immediately because it's telling the exchange sell it at 18 or higher, and Fubo is currently higher than 18, so it'll get filled immediately. In this case, we would set the stop price to 18.05. Remember, the stop price is the trigger, and we'd set the limit price to 18. We'd hit confirm and send that right away. And remember, stop limit orders don't fulfill after hours, so this will only be within market hours. But there you have it. You have a stop limit order queued up on Fubo for $18. If Fubo hits 18.05, the stop triggers the limit order and the $18 limit order is put in, and you will be done with your position. You can go to sleep better at night knowing that you're not going to be bag holding this into oblivion, and then you can use those funds for another position or another investment. All right, now comes the climax of the entire conversation regarding stop limits. What should your stop limit be on your position? I get this question all the time. What should I place as my stop limit? Well, this is relative. It depends on where you got in, how big your position is, what your max tolerance for risk is, how much you're already up or down, and you can include a bit more complexity if you know how to read a chart, because you could set stop limits around key support levels and just set them below. What do I mean here? Well, let's take a stock like MARA, for instance, which is Marathon Digital Holdings. It is the cryptocurrency mining company. And if we take a look at MARA's chart, it's currently sitting at the 50-day support, a level from which it normally bounces off of. So if I entered a position on MARA right here at the 50-day moving average, currently at around $38.93, well, I can set my stop limit comfortably below this level because it is not that far off from support. If you set your stop limit just below support, then you are not risking a whole lot to take this position. And I normally couple this with the potential profit. What do I mean? So if we get in at 38.93, and let's say we plan on riding MARA to the last swing high, there's about a 40% upside here. If we set our stop limit below support, and let's say we give ourselves 10%, so we could set it at $34.54, comfortably below support, but not killing us because there is a 40% upside and a 10% downside. So it is a 4-to-1 risk reward ratio. To me, this trade is a no-brainer, and that's exactly where I would set my stop limit at. The problem is a lot of times people watch YouTube videos, especially newbie traders, they'll get in a position like MARA. Let's just say that MARA tanks and it just continues to drop. Well, they haven't done anything with their position. They haven't managed it. There is no way for them to know when to get out. They just heard that MARA was a good stock. A good stock doesn't exist. A good stock at a certain price point is how the conversation should be reframed. Now, in general, the riskier the stock is, the more aggressive I am with stop limits. As I said before, in this day and age, at the time of this recording, it is not the proper environment to be trading penny stocks. It doesn't mean that I won't be taking a stab at a few penny stocks here and there, but I will be a lot more aggressive with my stop limit. And I definitely will not set my stop limit at a disadvantaged risk reward ratio, meaning if I'm expecting to profit 10% on a certain position, I'm not going to set my stop limit below 10% and throw off the whole risk reward ratio. To me, a risk reward ratio of 1 or better is the most suitable approach. So if I'm expecting to make 10%, my stop limit should not be below my entry by more than 10%. Obviously, in the case of MARA, for instance, this is an ideal situation because your reward rate, your potential reward is 40% upside to get back to swing highs, and you could set your stop limit at under support, which would be way less of a loss than the reward that you stand to gain. As I said, a 4-to-1 risk reward ratio. All right, so what if you're up on a position and you're wondering whether you should take profit or what your stop limit should be? Well, this is all subjective. This is going to be based on your profit-taking goals, your risk tolerance, etc. If you're up 40% on a position and I'm up 40% on a position, you may want to protect only 25% of that, in which case you would set your stop limit at 15% below where the current price is. If I was interested in protecting 35% of it, then my stop limit would be at minus 5% from where the current price is. There isn't a set stop limit that works for everyone. This is going to be relative according to your risk tolerance and your profit-taking goals. And the more that you trade, the better that you get at trading, the more this will become sort of an innate instinct for you. And as you get better, there are more advanced tools like trailing stop orders that I will not get into in this video. I will be doing a whole other video for that. So there you have it. What is a stop limit? What's the difference between a stop limit and a stop loss? How to set a stop limit order on Robinhood as well as Thinkorswim, and what should your stop limit be for your specific position. I hope you got something out of this video. If you did, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know if this was a beneficial lesson to you. Subscribe to the channel, hit that notification bell, and this video was made possible by our good friends at Notion, so thank them for sponsoring this video. Now, Notion is the ultimate productivity tool, and I've been using this for over a year now. It is an all-in-one productivity tool that lets you take notes, manage tasks, set goals, and so much more. I use it both for my business endeavors as well as my personal life. As a matter of fact, this video that you just watched, I wrote the script for it on Notion. Now, before I started using Notion, in terms of productivity, my life was a mess. I was using a combination of the Notes app, Evernote, the Reminders app on the Mac itself. It was just too disconnected and was causing a lot of interruptions in my workflow. I needed one central location where I can outpour all of my ideas, manage my tasks, and once I started running a YouTube channel as a business and I had a team, I wanted a centralized location where the team members can look at the board view, see what's already been done, what's pending, and what is yet to be started. Another thing that I love is I can keep this workspace collaborative while also keeping my private tasks private. And Notion is so customizable and comes with a ton of templates to fit every single one of your productivity needs. For instance, here are my video ideas, which are presented as a list, and there is a potential release date for all of these video ideas. However, you can even go a level below on the hierarchy, and if you click on one of these, for instance, you can see the outline of the video script. Whereas in the team workspace, the way that I set up the task list is in a board view because I think this maximizes productivity. It gives you a quick snapshot visually of what is done, what is currently being done, and what is yet to be started. Again, thank you to Notion, the ultimate productivity tool. If you're interested in checking out Notion, there will be a link in the description for you to check out Notion on your own. Thanks for watching, and I'm out.